Hello everybody, welcome back to my QuickBooks tutorials. My name is Zach Pasquarello and I am a QuickBooks Certified Pro Advisor and I am a bookkeeper. I own my own bookkeeping business, Harrisburg Bookkeeping, and I serve clients locally here, South Central Pennsylvania, and I also have clients all over the country, Florida, Texas, California. If you guys ever need any help with your bookkeeping, please feel free to reach out, email me, call me, whatever you need. I'm happy to help in any way. So today I wanted to talk briefly about your chart of accounts. So this is just a sample company. It's the same sample company I've been using for most of my QuickBooks tutorials. And the chart of accounts is important for you to understand. It has a lot of information, and this is where you report all of your transactions and all of your sales, all of your income. So it's important that you understand this, that you kind of understand the big picture of what the chart of accounts really are. So think of the chart of accounts as a big filing cabinet. So this is the database for all of your business accounting. And then each column here, each chart is like a file inside of that filing cabinet. So you can see here we've got expenses, other income, checking account, savings account, accounts receivable, inventory, other current assets like prepaid expenses. A good example of prepaid expenses would be insurance. If you pay 12 months of insurance up front, then that would be considered an asset. Fixed assets, of course, if you have any vehicles inside of your company. Credit cards, other current liabilities, any sort of loans or notes payable associated with your company. That's a liability. Equity. So this chart of accounts is really like a detailed representation of that big accounting equation. So it has your assets, which equals your equity, your liabilities plus your equity. So here you've got equity, opening balance equity, which is just if you were to connect a checking account, and let's say you had a $1,000 balance, and then you connected your account to your QuickBooks, your opening balance would be $1,000. So the starting balance in your checking account is $1,000, and that just helps your account in QuickBooks match the real amount. Retained earnings, so every year at the end of the year, your net income gets rolled into retained earnings from the year before. And then your income, various types of income. So this is a landscaping company, so they've got landscaping services for their income. Okay, so this is the chart of accounts. And then you can, in QuickBooks, you can view the chart of accounts specifically. And you can see all of the transactions associated with your accounts. So in previous videos, I explained how to report expenses, bills, invoices, sales receipts, and then also how to do all that from the bank feed. So all of those transactions show up here. So you can see here, bill payment. This is a sales receipt, so an increase of $337.50. Expense, check, payment. So all of the transactions that you associate with this checking account, with this chart of accounts, will show here. And if you ever wanted to edit a transaction or delete, you can go here, you can click on it. You can pretty simply edit the date, but if you wanted to add some more details or change some more details, here's another option. You can click the edit button and then it'll pop up here, and then you can edit whatever you need to edit. So this payment is associated with this invoice. Just one example of one of the transactions. So along with this chart of accounts, you will see here in your QuickBooks this check mark in this column here. It'll either be blank, it'll have a C, or it'll be an R. So if there's nothing, then it's not cleared or it's not reconciled. If there's a C, then that transaction has been cleared or it's tentatively reconciled. Or if it's an R, then it is completely reconciled. So real quick, if you have bills and you pay your bills with this option right here, it'll show up as a bill payment right here. But the check will not be cleared until you match this bill payment in your bank feed to an online banking transaction. Or you can manually mark it cleared here by clicking this button. So I'll say that again. So the bill payment right here, so it's virtually paid in QuickBooks, but there is no money withdrawn from the checking account just yet because the person you paid the bill hasn't cashed that check yet. So there's no online banking transaction to be matched to this virtual QuickBooks bill payment. So it's not cleared yet, but it is still reported as a bill payment in QuickBooks. So once you match this bill payment in your banking feed, it'll automatically change to C for cleared. And none of this is reconciled yet. And what I mean by reconciled is you basically take the statement balance at the end of the month and the statement balance at the beginning of the month for your checking account, and you make sure it equals exactly to what is in QuickBooks. So I'll show you what that looks like real quick, and I highly encourage you to reconcile all of your checking accounts on a monthly basis. This is how you can know 100% certain that your QuickBooks is accurate. Because if the ending balance in your QuickBooks matches the ending balance on your bank statement, then there's no question. It's the exact same amount of money coming in, money going out. It matches perfectly to the penny. And us accountants and bookkeepers, even if it's 1 penny off, I mean, it's not reconciled. You have to get it exact. So you can click this button here, Reconcile. And if you've never done it before, you can click this here, Get Started. Sure. Okay, so you choose the account you want to reconcile. So for example, we will reconcile the checking account. And I talked about the opening balance equity. So that's either the opening balance equity, or if you've already reconciled your account, this beginning balance will be the balance from the previous statement. So this month is April. So whatever the ending balance for March, that'll be the beginning balance for April. And let's just say it's the end of the month now, so we know the ending balance. I'm just making numbers up, so it's not going to be right. But okay, so $6,000 for the ending balance. And I get that number. I don't make the number up in real life. I would get that number from the actual bank statement. And then whatever the date of the bank statement is. So we'll just say, for example, today. Typically, banks end at the end of the month. Sometimes it's the middle of the month, the 15th, but it's usually, bank statements are usually on a monthly basis. So it's usually the last day of the month. So beginning balance, ending date. And if this is not accurate, then you will need to create a journal entry. And you will need to change the opening balance equity of your account. So make sure this matches the beginning balance of whatever bank statement you're referencing. So you start reconciling. And I just made up the $6,000, so of course there's going to be a difference, but ideally you want this to be $0. Even if it's 1 penny off, you still want it to be exactly. So it should match exactly. So here you would take all of the transactions from the month, you would select them all, and then the beginning balance minus all of the transactions plus all the deposits should equal the ending balance. So here you should see a difference of $0. It's not matching up now because it's just a fake account, but that's a brief overview of how to reconcile your accounts. Reconciling your checking account can be complicated if you're missing transactions or if you've added incorrect transactions, but hopefully it should be a pretty easy process for you every single month. And it is super, super important that you do it every month, because if you wait too long, if you wait 3, 6, 9, 12 months to reconcile, you might find yourself in an unfortunate situation where you're thousands and thousands and thousands of dollars too high or too low, and then it'll be a serious endeavor for you to try to find out which transactions are incorrect. So please, I highly encourage you to stay on top of this. Reconcile your checking accounts every single month from the day you start business, and it'll just help you stay organized. And if you need any help reconciling your accounts, as always, please feel free to contact me. You can call me, you can email me. In the description below, I will give you guys my website and my Facebook page. Feel free to let me know if you have any questions or concerns about reconciling your account. It is kind of complicated. I hope I explained it in a way that was easy for you to understand. If you want me to explain anything else, let me know, and I will gladly make a tutorial for that. So thank you all for watching this video. My name is Zach Pasquarello. I'm a bookkeeper. I'm a certified QuickBooks Online Pro Advisor, and I own my own bookkeeping business, Harrisburg Bookkeeping. So have a great day. Good luck with your QuickBooks, and I'll talk to you all later.